Hey, good morning, everybody. All right, so I think the Bulls' time is running out here. Their attempt to bring things up off of this support and a little gap down this morning that's going on here. They're waiting for Europe to decide about raising interest rates. In any event, you see things are coming down here a little bit. It's been chopping around for a few days. The move down was vertical, as we talked about in the past. Stopped at support, stopped on the way up at minor resistance, weakness, couldn't get up to the declining 20 or even close to it. Yesterday's gap down, was just inside the prior 2 days ranges. So, whatever. You can see just the sideways price action on the hourly. It's created resistance. We got a little support here. It's in the middle of the range. Basically, it's going nowhere. And whether it decides to move today for whatever reason, we'll just have to see. But it's just marking time. So marking time relative to the bigger picture. Weekly chart, it's marking time at the bottom of a big, bearish, ugly, wide range bar, which is going to set up, I believe, some kind of continuation pattern lower. We're on hold as far as the markets go until something breaks one way or the other. But just based on this pattern, it looks like it's going to break to the downside. Just not happening yet. As I mentioned yesterday, look what would change that. Well, a big wide range bar, the depth of retracement, what we apply bar by bar analysis to guide. What would change? Hey, it's time to move as far as this time frame lower. Well, a red bar that closes near the low. After 3 days or so of hanging around here, a red bar would be a signal. Time to go down. It may not come until next week. Kind of just a lot of choppy, going nowhere action for the moment. Our futures going nowhere. It's just the kind of a pattern that you just stay away from, because it's just indecisive. So you can trade it intraday, of course, at the appropriate times with the time frame that you use, but a chart that looks like this, what's the point? And just stay away. It's not going anywhere. There's overlapping bars, there's tails. It communicates uncertainty. It is in a minor downtrend within a larger trading range. It doesn't get much worse, because even if it starts to drop, this hasn't hit this support yet. It got close, down here. So theoretically, just because it got close and tested it once, it could break through it. And if other things are going down, it'll break through. We'll get to the NASDAQ, which is holding up better, but I think its time is running out as well. SPX, I'm not so sure about this today. The ranges are expanding. So we could get a big bar. I kind of put this where in the area about where it would open based on SPY. And so 90 points, 90, but average range right now is around 90 points. So 90 points up puts it at around 39.50. If it could rally up there, you got the 200-day. In a way, you got these pivots up there. Kind of drag this down here. The top is up there, but that resistance. So it certainly isn't a no-brainer, at that level. If things start to drop at the open, getting down below here, let's see what the premium is now. Yeah, still 39.65. So 39.70 was where there was enough premium. So, that ain't bad. Is it still okay as it dropped here? Yeah, 30, that's kind of 39. That's pretty good. 39.70 is 90 by $1. You can go 39.75, which is, quite a distance from where it is now. It's a bit more attractive, actually, to be able to get all the way up there near that resistance area. Yeah. 55. I'm not sure what you're saying there, Jake. For 55 cents, I see the bid at 39.80. It's 55 cents. I don't know if you're talking the spread, but things are moving. They're moving around here. So potentially with this, European maybe rate, things drive lower and premiums really pop up. Thank you, Jake. 25 wide to get that, which is fine. You might think, those of you not familiar with SPX, I think 25 wide is insane. It's not, because the idea is, because this is leveraged, the premiums get jacked pretty good. And, just based on our approach of what I explain here day to day, the probability of getting to the levels that we look at are low. And, those that have been around for a while and follow this, you see that, they rarely ever get to the levels that we determine on a day-to-day basis. They can, and when they do, you better get out of the way. But it's kind of it's a hard thing with credit spreads. I know I find it difficult with credit spreads because I'm so convinced when I see something that it isn't going to get there. And, the reward to risk isn't what it would be for most instruments. So you better have a plan. But, as we look at things, the odds of it traveling and getting under this pivot low today, while it could happen, it would have to travel far enough into an area where buyers would likely step up, unless of some kind of Armageddon type of situation, right? And that's the unknown. You have to deal with that. All right. The strength has been tech, and tech is up at this pivot high. And it came down to the pivot low, rallied up. It's up at resistance. Now there's going to be sellers. You can see the rounding kind of formation that's happening here. It's got a little void below. So now, right, it's vulnerable to some kind of pullback. And should the markets pull back, how much this pulls back, or the lack thereof, does it hold this area of support down here below this little blue area? Let's say we get a larger drop in the other markets, the Dow, which has got lots of room, and the S&Ps. If this holds here, I think that would be really super positive, but that's yet to be seen. Right now, I think it's vulnerable to a pullback, and you see Microsoft has been holding up really well, but it's up a few days. So these stocks, Meta, that was up. Square got an upgrade today. We're going to be watching that for some intraday trades today. So the strength has been in those tech sectors, and hopefully they continue to show relative strength on any market correction. I'll just mention internals here. While this is down at a bullish level, breadth is not there yet. Even being down here, the other market's inability to move up very much, that's bearish. So the next drop could get sentiment down here. And the fact that after this drop, sentiment is not in between these bands or down to 1.2 by now, I think it is just displaying complacency. And when you start looking at the drops that are occurring in crude oil, in steel, in copper, in airlines, cruise lines, rails, truckers, I mean, they have their head in the sand. I mean, this is saying recession and screaming. So we'll see what plays out. But the strength here in tech, it's really has to curb any real enthusiasm for the bear case intermediate term. That's a big positive. Mr. Russell led the way down, and it looks like it could, once it starts to break here, come all the way down to the October low, and we do have like a continuation pattern. So I don't really care for these kind of continuation patterns, meaning it's down here near this support. It's got this reversal, which says lower. Your stop's got to be here, which is relatively close. The best continuation patterns occur when they break and they happen right there after the initial break. Those are the best ones. This could work. I'm just saying it's not the best of the best, but right now this green bar being ignored, and the size of yesterday's bar there is suggesting that this could go down to the October low. And of course, if institutions don't want small caps, the more riskier ones, it's really a measure for the market. And markets are always interesting, but what's interesting now is that they see these, well, I guess what you call high quality tech stocks as a good place to park money and being more safer. But I don't think they're going to be saved from some type of corrective action when the selling starts. Dow, it's been weaker. It's got plenty of room to drop. And it'll be interesting to see how far it gets. Does it get, what happens if the whole numbers 3,100, 3,000, 29,000, So right now we've got this sideways chop here, which means, sidelined as far as this time frame goes. Intraday, you can see this is setting up. I don't, like it's going to go lower. So we could find some, shorts on individual stocks and of course futures. There we go. It's starting to drop here, but support is, well, for day trading, it's fine. It's fine. But from a swing perspective, it doesn't have much room to fall. Again, the transports weak. So as we look at other markets to see which, are they moving in unison? Are they one showing relative strength or weakness? And we see, that this is going down. The Dow is going down. Before it was showing relative strength. So more and more information coming together to support a bias that the markets can drop. Interest rates, they're just hanging here for now, but they come down to support, kind of like the markets. You can see the overlapping bars not going anywhere. So the longer it sits here without an ability to pop back up, the greater the odds of it, breaking lower. And well, that intermediate term will become a positive in alignment with those dropping industrial metals and transportation stocks. It'll be another, piece of information supporting a belief that recession will be coming or is already here, because markets anticipate. And, sometime in the future, the value of numbers that are shown that markets in recession will come about. All right. Dollar. What is that doing here? Marking time. So lots of uncertainty out there about, is the market going to hold? Is the next shoe going to drop? All right, we got that yesterday with Credit Suisse. So again, trade smaller. There's always quality patterns. I mean, look at oil falling here down below that consolidation that was going on. Now it's coming down to the next level of support. So it's more likely to stop here because this is the first time these levels you can see on the weekly chart are being tested. But a consolidation that went on for a few months and now it's breaking down. That's bearish. Interest rates going down is bearish. Steel, copper, and so on going down, all bearish. Bitcoin going up, right? How crazy is that? People thinking Bitcoin is a safe place to go, but it's showing relative strength. Oh, we have to wait. I'm kind of laughing because hey, I feel like it's going lower. Like I know that, but in the moment, there isn't a pattern to support taking action based on the daily charts. And while you could use stops on those continuation patterns, it's just not the ideal scenario with such an uncertain market. So again, trading small, bigger stops, and that's calculated risk. And no matter what happens, you'll be okay. You kind of get a little bit of a flesh wound, but you won't lose an arm or a leg. All yours, Dan.
Good morning. So I was reading the paper today that little end of day spurt was because of the shoring up of Credit Suisse. We had a little pop there into the close. And so I said my bias was over yesterday's high, day trade only, long. So now we're down here a little bit on all this ECB stuff. So I'm 100% neutral right here for as of right now. Credit Suisse got some funding, a bailout. Greg was mentioning some big player was just buying this yesterday, and then good for them. You take risk, you put your money on the line, and I hope they made a lot of money on that trade. Good for them. All right, we are very light inventory. I posted a couple earnings trades here that I like, or gaps. Snap I don't think was a earnings, but nice gap here. Look at my weekly, monthly. Now it was a breakout failure on the weekly, but that's okay. It's still a potential big old bottom, and it's gapping up here to 1080. So that's a very bullish gap. So 30-minute high or some type of controlled pullback. I like that. ASO had earnings, gapping up here to 62. So see, that's a bullish gap. So I said 30-minute high, or I'm going to put it in a window here and try to get a controlled pullback. Since it went vertical here pre-market. ZTO had earnings, nice, beautiful 1, 2, 3. Really can't tell where it's opening. I hope it opens flat. And then yesterday's high will be a beauty 1, 2, 3 with a price void. And Asian. This is not earnings, but I just saw it go by the ticker. Look at that explosive move, 180 reversal, breakout. Look at weekly, monthly. Look at that. It's not a textbook W bottom because this didn't go up as much, but it's a new low reversal with a monster price void. So, we don't like entering things far from the 20 like this. So that's why I said let's sell the way out of the money, $17.50 puts for next month. FWONK here was on my long list yesterday. When you have a deep retracement like this, it looks like Snap a little bit actually. Got a nice 3-bar reversal and support in the 50. I'm going to Set an alarm, just, 70.15, 3 cents over the close. Hopefully it'll gap down with the market. But got the alarm. Let's go right to some earnings trades. I noticed a bunch of these regional banks are gapping down here again. I think this stock behavior suggests that this very well could be the next to go regional bank. And I think I read something today that they're looking to sell themselves. Hence the 30% haircut. Yeah. So, hello, McFly. What do you think that tells you? They're in bad shape too. So, there's danger with these regional banks. I heard some interesting talks on the news today about this whole issue. And they said the Fed doesn't have the authority to do a blanket, I'm guaranteeing all deposits. Congress has to do that. And that's what I was saying yesterday. So this implication that the Fed, by bailing out SIVB, backstopping all their deposits, in my opinion, does not mean that's a blanket guarantee for everybody, unless a bill is passed. Right. There's an exception in FDIC, the contagion, exception. If you think whatever those buzzwords are that they use, and that's the exception they used over the weekend to guarantee it, to prevent a run on the banks. And so I agree that was the right thing to do. But the point I'm making is that is not the same as blanket. That's all. All right, Adobe here. Gapping up 345. Big gap. Yeah, that's funny, Lawrence. That's funny. So Adobe on a controlled pullback. Let's look to sell a put spread. FNV, no prints. The CTO, that's the one I just posted. 5 gapping down 192. 30-minute low, short idea plus call spread. Path. That's a pro gap, but the gap's too big. So let's watch that on a pullback. Airy, no pattern, sloppy. Papa Delta, 29 and change, gapping right to resistance, nothing to do. This little poor IPO going into earnings at the all-time lows, gapping 1635, about right there. Bullish gap, but it's garbage. No interest. Why? I tried shorting puts on this yesterday into earnings, did not get filled. We'll come back to it. It's a Climo. No pattern, light volume. It's a breakdown. Looks like a short under yesterday's low. LPSN. That's look at that 50% haircut. Neil, whatever I told you, I set it for midpoint. I did not get filled, but you 99% chance have a profitable trade at the open. So good for you. And I tried one other, I forget which one it was. Maybe you all remember. I sent so many. It was WSM. I think I was trying to sell the 105s naked for 85 cents. That one I remember, and did not get filled on that either. It was more spreading. This poor thing, Petra, looks like it's going out of business. That's in a death trend. Oh, you want to call credit spread because the gap's too big? Oh, you're saying YouTube. Gotcha. Yeah, Greg, that's good that you do that when I miss the question. So yeah, YouTube's asking, what about a call spread? It's a very bullish gap, but it's to resistance. So two things possible. Let's see how it acts at the open, the first 30 minutes. Number two, only one DTE. I would not trust this for 8. Number three, go through the the normal checklist, spreads, premium, etc. Got it? Got it. All right, I just had a D-Dog alarm go off. This is a nice reversal and support, gapping up here. So this, market down. So don't have to rush into it, but that's a definite put spread idea for tomorrow. It's a Climo, but in a downtrend. It's a mess. MLY, recent IPO. It's a mess. SMER, mess, bearish. I just do not trade things that have these nasty overlapping bars like this, unless it's just a credit spread. $4 stock up and down. Hey, Robert. $4 stock going nowhere. TPC, nothing. Delta Golf. All right, Delta Golf. So I'm going to set an alarm at 218.50. Because if this can negate the gap down and take out yesterday's high, then it will be, nice little bottom for a put spread or day trading. 218.50. Done. Beaky, we talked about. Jable, no pattern. They're at WSM. Maybe one day put spread if there's any juice. SIG 7280 bullish gap with the resistance. Momo looks like short of bounce. I think there's no support to the left. That can fall all the way to the 200. JBI, no pattern. PCT, bullish gap. Nice. So you got a little buy set up here pre-market. Maybe 10-minute high, day trade. Titan. Ooh, that's ugly. Look at the size of that gap here. Man, that's ugly. Yep, it's on the list, Scott. I posted 30-minute high. But the more it runs, the more you might have to cancel it. No pattern. DBI, possible day trade, but no interest. Bravo Juliet. This was not okay. So I'm done with earnings trades now. This is just my leftover watch list. If this closes here, it'll be a 1, 2, 3. Amgen bottoming pattern. I'm going to set an alarm at 234.50.